Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Here we are, another typical Monday morning. Markets are selling off pretty hard, down a little over 1% last time I checked, but they are bouncing back a little bit. Now looking at the equity markets, we're basically still in a confirmed uptrend. Although the Dow and the S&P are lagging, what we do see is the NASDAQ composite still leading the charge with an upward bias, as are small caps and mid cap stocks. So although the general indexes aren't faring that well, we saw the S&P and the Dow close below its 50-day moving average last week. Individual stocks, and still you look at the NASDAQ and the Russell and the mid cap, continue to do well. Now part of the reason this may be is we continue to see weakness in the consumer staples, utilities, and energy, and that's probably weighing on the S&P 500 and the Dow. However, consumer discretionary stocks, healthcare stocks, technology stocks continue to do very well. And the thing that also leads me to believe that we're still in a pretty good uptrend without anything dire around the corner is financials are leading. It'd be very unusual when you see financial stocks leading in this market and then market turns into something ugly. So as this market's going on in this type of pace, we continue to look for growth stocks because those are actually doing very well. If your individual stocks are doing okay. So we're looking for breakouts, and we found one in a stock called Mobileye. Its symbol is MBLY. And the reason we like it is it has some great characteristics of a growth stock. Its 3-year average earnings per share is about 192%. Its 3-year average sales rate is about 102%. Estimates for next year in earnings are at an increase of 77%, and for 2016, an increase of 82%, and it has a return on equity of about 18%. So those are very good characteristics. Now the reason we like it too, Mobileye came out IPO a while ago, corrected, and now again it's emerging out of a deep base, and last Thursday crossed past the pivot at 49.78 on extremely strong volume. It followed through on Friday. So if you decide this trades for you, you can try to pick up shares right around this area. It's actually pulled back this morning into the $49 area. So anywhere between the 48.78 to the 51.50 is a place you can buy it. We see some strong accumulation, big volume on the up days. So that's the reason we like it. And of course, consult your financial advisor to see if this trades for you. So we started accumulating shares on Thursday and Friday. We'll probably nibble on some more this morning. However, if the stock does drop below 44, the trade may not work out. 44 has been a pretty good support over the last few weeks for this stock. So that may tell you that indeed this trade isn't working, or maybe keep your eye on the general indexes, see how they're fair. Maybe they may start turning over and falling and things getting worse. But that's to be seen. Let price and volume be your guide. For now, the trend is still up. This is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Good luck trading.